July, and happy Bastille Day to anybody watching from France or any French viewers. Vive la République! So markets remain dominated by the US dollar, and the big spike we had yesterday in CPI out of the United States, 9.1% annualized inflation came in yesterday. On the upside, some of the data within the headline looks like it may, I'm not going to say it again, but may have topped out. It seems to be cooling quite significantly. Things like, remember this time last year we were talking about, or 6 months ago, we were talking about the only thing that was dragging inflation up was the second-hand car prices in the US. Well, they've come down very significantly. International shipping rates, for instance, have also come down. Obviously, has an impact on US inflation rate, but it's just another indication of the positive side of the story. Inflation topping out. There's still people obviously saying that this is going to go higher from here, but and the CPE data that the Fed are more interested in seems to be sort of cooling off as well. But obviously the headline yesterday grabbed the attention. We had a big rally in the dollar. We had this surprise from the Bank of Canada as well later on in the day, and we had a lot of volatility across dollar crosses, particularly obviously dollar CAD, and the dollar remains very, very much bid. I've just realised I'm not sharing my chart, so let me just hang on a minute. Let me just bring up my charts. I should have done this before. Chrome tab. There we are. It's going to let me do that. So there we go. That's the chart. So this is what we've got. This is dollar CAD on the 1 hour chart. So again today the dollar's bounced back again. This is the volatility from yesterday. The initial spike here of the CPI. We then had a big retrace on the Bank of Canada announcement under the 200-hour moving average into this 129.50 area. Now we closed back testing 129.75. Now we've had a big old rally again today as the dollar's just received further bid. So it really is all about the dollar. We've just had JP Morgan's second quarter earnings out as well, and a warning from Jamie Dimon, the head of CEO of JP Morgan, about the future outlook for inflation. So he's been a bit negative. The profits at JP Morgan were down 29% or 28% on the quarter. Not a great start. Remember, they're America's biggest bank, the most significant Wall Street player, and the dollar is bid. Herman's asking about what about the dollar? Well, the dollar, Herman, my friend, is bid. This is dollar CAD up, dollar index up here. Let's just zoom that up. This is 1 hour again. We're over 108.50, so this is a big 108 line. If we look at the daily chart for dollar index, it's bid, it's bid, it's bid. This purple line here, or the gentle line here, that's just about to touch 106, is the 20-day moving average. So we've been bid all of June, a big another leg higher in July. Once we broke that 105 level here, we'd be topped at 8. So dollar remains bid. It's all to do with a stronger dollar, but also a weaker euro. Remember, the dollar index is comprised of only 6 pairs, and the euro dollar pair takes about 50% of that weighting. So euro here, as I'm sure you're all aware, went under one yesterday, went under parity yesterday. We touched it on Tuesday. Big reaction when we did hit one day back to 110, but then we've just weakened from then and given up all that gain from yesterday here at the inflation number here yesterday afternoon, and moved all the way back down to, again, we're at 1.0007. So euro remains very heavy, and dollar is the game that's in play. So against sterling, 118.35 at the moment, weighing. We've just had the US data. We'll come to that in a minute. But you can see the dollars remains bid. So today's major data was the PPI and the weekly claims. Yesterday's CPI data, the consumer price inflation, was heavier. The PPI, which is the producer price index, has just come out about 10 minutes ago, and my workstation here is not showing. These things always happen when you're live, don't they? They never happen when you're just writing it calmly with nobody watching. So US PPI has come in also hotter at 8.2%. It's only one tick higher, but last month's, interestingly, has been upgraded as well to 8.5% from 8.3%. So that's more dollar strength. That's perceived dollar strength, more pressure on equities. Yields are up. The yield curve is the other key thing. It's inverted. The 2-year yields are now yielding more than the 10-year yields, which is a sure sign of inflation, or it's been a sure sign of inflation in the past. That's one of the main reasons, not just CPI data, not just this PPI data that's come out now, but this inverted yield curve in the credit market is very significant. So PPI for the US, let me just recount, year to date for June has come in at 8.2% versus 8.1% expectations. And last month was upgraded by 2 ticks from 8.3% to 8.5%. So it's less than it was last month. Again, you could argue it's a sign of topping out, but it's higher than expectations, hence the volatility we've just seen just now. On top of that, weekly claims are also worse than expected. They've come in at 244,000 compared to 235,000. However, that is still a very hot US jobs market. We're getting to the top end of the range. Anything over 250 is above normal. So we're getting to that top end of that range now. It's been ticking up the last 3 or 4 weeks now. Claims. So claims are back up to 240,000 this week. PPI is coming at 8.2%. Both of them worse than expected, if you like, for the US economy and strong. So that means a stronger dollar here. We can see the dollar cable here at 118.23. Let's go back to the euro. Euro here at 1004. So it's top 3 ticks, just while we've been talking here, and it's a dollar strength. And one would expect. Hang on a minute. One would expect. What's happened here? Why can't I see anybody? Chat. What's happened here? I can't see your comments anymore for some reason. Oh dear. I don't know if I'm still connected, but Herman's the last comment here, and I can't see your comments anymore. Okay, I'm assuming you can still hear and see me, so I'll keep going unless you tell me otherwise. Yeah, because the chart's still changing, isn't it? Yeah, it should be. Okay, so euro down, and let me just make sure the chart's checked in. Yen is another big story. Dollar yen today, 39. I don't know if you saw any of my posts on Facebook this morning or on Twitter, but let me zoom this in a bit. Let's see if you can see on at 39 for dollar yen. There's no sign of this. Oops. I can't see your comments for some reason. Oh dear. Oh dear, everything's broken and I don't know what it is. So your comments have all disappeared, chaps, I'm afraid, and ladies. Let's try this. There we go. I've got you back. So where do we get to? Dollar, Herman, yeah. So dollar just remains bid, as I said. Nina, gold. Gold's not Ninesh. Gold is reluctant to do anything. It's just not happening. Nothing's really going, except we are short, and we've been short, or the market's been short from this big sell-off from the middle of June. We've been talking about that. We start to move up here. This big down candle here on the 13th, a month ago now. Yeah, 5th of June. We had another one earlier this week, 5th of July, and we're down again today to 10 levels. So we've broken through 1800, we've broken through 1770, we've broken 1750, 1725, and this now brings in 1700. So here on the daily time frame, we've been on the 20-day moving average from the beginning, middle of June here, and it's just started to unwind up, but it doesn't look like it, does it? The daily's down. This is the weekly chart, so that's down. Daily's down. 4-hour chart. Let me zoom in a bit. Move back a bit. So 4-hour chart, as you can see here, also down. Big move up here. Back to where was this? This was that only yesterday? Yesterday, positive candle here. Back to test that 1740 level, 1724 and 1740. Remember, areas, levels we've been talking about for a while. I'm using my black charts again, Arena. I hope you can see my lines. Sorry about that, guys. We started using white charts last week, but these 4-hour candle are 1, 2, 3, 4, 5, all to the downside. That's 5 times 4 is 20 hours. That's most of today. That's from yesterday to the downside. And here we are at 1708 dollar. Yields going up, all weighing on the dollar inflation higher. That should lift gold, sorry, Nish, but it isn't happening. 4 hours down, and the 1 hour. Let's move it back. That was yesterday's spike up to the 1742 area. There's our 1724 area on the 1 hour new day. It's gone sideways, and then we have a big shakeout here at 9 o'clock this morning, so until 10. We'd already been short here from 7 o'clock, and that move up didn't work out. Closed short here, and then it's been down all day. And 1707.22, that spike lower yesterday, so we're testing that. So it may get support down here, Nesh, but at the moment the trend is certainly to the downside. Moving averages all around 50, 20, and 5 here. Blue, magenta, yellow, blue, light blue, and dark blue here. All in alignment, all moving down. That's pressure downside. I think, Adina, I think gold is going down until 1600. That's interesting. I don't know where you get that target from, but certainly 1700 is obviously the first. Whoops, it's the first. Oh dear me. Sorry, it's the weekly. Is certainly the first target here. This is near 1700. Here on the weekly chart, Dean, where does that take us? First spike there is 1689. So 1689 from the week of the 8th of August 2021. So last summer we went to spike to 1670 levels, so under 1700. So certainly 1700 is the next level, and 1600 takes us all the way off this current chart. This is the weekly chart. So let's have a look. Where you get your 1600 from? Yeah, it's definitely definite possibility. One would say 1600, nice round number. That's 1684 on a weekly chart. Then 1615 here. That takes us right to the chart here. I'm not sure. I'm zooming that one in. I'll zoom that one out. I should say, not in. Where were we? We were here, weren't we? So next level is that one. That 1620, and that back to what's that? April, May 2020. So it's still a Dean, but certainly here, as you can see, the gold on the weekly is very much in a downtrend. We're down to the 1, 2, 3, 4, 5th consecutive week lower for gold. Click on them to show. Okay, right, there's no more comments. I know what's happened here. Everybody seems to have disappeared. Never mind. Let's have a look. We got anybody on Facebook? No internet. Oh, right, we've lost the interconnect connection, so that's not a good sign either. So hopefully I'm still here. But gold, yeah, gold is certainly in a down leg. That might be why everybody's disappeared. Let's have a look. There's no comments on Facebook, I don't think. Mohammed, good afternoon. Bianco, good afternoon. Felix, good afternoon. Anything you want me to have a look at, guys? Have a look in here. I say the data has been dollar positive. That's why we've got this weaker gold chart here. So let me just look at that weaker gold chart here on the day on the hourly chart here. We're down at 1709 and continuing to unwind to the downside. There we are. No more comments. So something's broken, I would guess. So let's just have a quick recap. Have a look at what the markets have done. So yeah, we've broken, or we're testing. This is equity markets. This is the USA 500, the world's most important stock market, the S&P 500. And we've had JP Morgan reporting profits down 28% for Q2. Wall Street's biggest bank's not a good start, is it? So 3752 is where the US futures trade at the moment, with 40 minutes to the cash market open. This is the line up here. This brown line, this golden line here, is the 200-hour moving average, which sits at 3835. If we go up the time frames, the 4-hour chart is looking particularly weak under its 20 period moving average here from the 11th earlier in the week. It's been drifting lower all week, bit of a retrace earlier, continue to unwind and down into this key 1740, which is our low here on back in the 29th of June. The spike that went to at the beginning of July as well, this 73740. So we trade it, it's 3753. 3740 is a intraday low, which we may or may not test today, and then the big round 3700 is key. To go move higher, we need to move back over 3800, but more importantly, we need to move over 3900 up here, which is where the 4-hour 200 moving average sits here at 3. That's at 3,900, and that's a key daily time frame. Well, if we've got the daily time frame, see the 39 level is this level here. It's top, this high zone we had at the beginning of July. This is another, in my humble opinion, bit of a bear market rally, but becoming weaker. So it was up. Let's zoom that in, actually. See how that was a stronger one, and then it topped out at 174. And here, the end of June, but it was a weaker up, less, got more resistance. We went to 3950, and then last week we went into 3900. So that's our resistance: 3900, 3950, and then 5. And obviously the big cycle, which was 4,000 and 4,100 levels in between those as well. So we're still drifting lower. Next big support 3700, and then with that here on this daily time frame comes the key. I don't know, I actually got it on here. That's why it's 3,500 by the 200 hour. Sorry, 200 day. Sorry, that's weekly. What's on that? So on the weekly, so we go to the weekly. The 200 week moving average sits at 3,500. So big support at 3,500. But first test of the downside is 3,700. So I guess the link is broken because there's nobody else arrived, and there's nobody else arrived. Let me just refresh Facebook. If I refresh, I'll lose it all onto me. Yeah, I think we lost. We are out. So where's it going to pop up? Just bear with me a second. So there we go. So there's gold. So let's just have a quick run through of where we are today and what's going on for the rest of the day. So dollar, as I said, beginning remains very much bid. No bets against the dollar today. We're over 108. We gapped on open, interestingly, today, having had a very, very volatile day yesterday because of the CPI data and the surprise from the Bank of Canada raising interest rates by a whole basis point. This now puts, the Fed next week at their meeting, that the bet for a 75 basis point rise were diminishing. There's chatter about 100 basis points from the Fed as well, which is, I'd be very surprised if they went that way, because just a week ago we were talking about 50 basis points and the pressure for a 75 basis points was this story of the peak inflation. Some of the data, I said, from yesterday does give into that argument. So it will probably mean that the 75 basis point is cemented in, But what markets are obviously always then looking forward to is, or looking forward towards, is towards the end of the year when perhaps the rate hike cycles might start to cool down to 25 basis points for November, December time frame. That might have now been pushed out into 2022 as the inflation headline remains very, very hot. If the CPI data continues the of inflation, continue detail of weakness, we might have some more bets on that they're going to start cooling this rate hike cycle perhaps earlier than currently priced in. But at the moment, the dollar remains firmly bid, and here at 108.61, dollar index remains very, very bid to the side, and the pressure now comes back to the Europeans and the UK, because the Bank of England meet on the 4th of August next. Political upheaval in the UK, where the Prime Minister has resigned, and the new leader of the Tory party, the fighting is starting to be narrowing down between 2, possibly 3 candidates. Current former Chancellor Rishi Sunak led the first round of voting. There's another round of voting today, but he's under pressure from a less well-known lady called Penny Mordaunt, who's been the Secretary of State, or not Secretary of State, but Minister of State in the Trade Department. She's a very, very aggressive Brexiteer. That she appeals very much to the grassroots of the Tory party. And then the other major contender looks like to be Foreign Secretary Liz Truss. But she's a darling of the grassroots, but perhaps has less parliamentary support than Sunak. So we'll see how it all pans out. 5th of September, the UK will have a new Prime Minister and a new leader of the Tory party, and perhaps a new direction or not. Remember, all of 3 of these candidates have all served in the somewhat disgraced Johnson administration. So not really a clean start. But anyway, the upside of all of this is pressure on sterling. Not only have we got a strong dollar, we've got a weak pound. So the sterling continues to unwind. The big yellow line of 20, that's the key resistance going forward now. That's a 200-hour, is way below that now, here at 119.53. 119 itself sits here, this yellow line, and we're currently trading at 118.16, so we're much closer to 118, you go to 119. So sterling, certainly against the dollar, remains pressured, and to the downside. 118.06 was the low we got on Tuesday. So sterling unwinding with a stronger dollar in place. Technically, moving down there quite significantly. Signal line here, 4-hour still sort of looping down. We can't hold over the 20 period average at all. Here, since the end of June, here as we've moved in, here we are, the middle of July, and the trend remains very much to the downside. And on the daily time frame, it's been 20-day moving average since the beginning of June. Here, the 8th, 9th, we went under the 20-hour first trigger low, down, retrace, right back over the 20, completed. Next leg downwards here was the 28th of June, and then we just continued to move lower. So lows were added at 120, no doubt, or more shorts were added as we broke 120. 120 is a huge psychological number for cable, as historically, 125 is the next big line in the sand for cable, but that's a long way away at the moment at 118.06. So 115 is much closer than 120, isn't it? So cable remains under pressure during the summer. Dollar yen, we talked about record 24-year highs at 138. Aussie and Kiwi, all the commodity currencies, stronger dollar. The Kiwi, whoops, where's the Kiwi gone? Kiwi under 69, under 68, and we trade at just above stock 67. So this is the daily time frame. You can see, another one. Don't like the dollar, guys. Down at 67.09. So 67 is in play. Dollar CAD's over 131 this morning. Massive move today. I think that's why we started, didn't we, today? From the Bank of Canada. but the dollar itself has recovered, and 130.50 was our resistance through here this week. No, that's 134, 130, 130.50. Come on, let's move it. 130.50 here. Resistance, resistance, resistance. Breached it this morning, and off we go. 131's gone, 131.50's gone. And if we take this up the time frames, now there's the daily, huge candle today. Weekly, there we go. Massive week this week from the surprise CPI inflation from the US, the surprise move from Canada, and we continue to move higher here. So if we look on this weekly chart here, the next fib extension I've got on this chart here at 161.8 takes us to 130.41. So that will take us all the way back to this resistance area here, back in the summer of 20. And so 2-year high here for dollar CAD at 134.30 is the next upside target for end of week trades. Obviously, it's still tomorrow to go, so we can't make a current weekly candle, but you can see the trend is very much up here from beginning of June here on this weekly chart. Zoom up there, see it will be better. So strong rally here from this test of 25 for dollar CAD. So we were up, down, and then another up here, and extension of that retrace there. You can see the retrace on the weekly. Hope you can. You can see the Fibonacci retrace. It's like here. So the extension of that, if we broke that this week thus far, takes us to this 134.30. So 134.30 target for weekly traders on the dollar CAD. Meanwhile, it's a strong old day today for dollar CAD traders. Now it's obviously correlated to the oil market. We'll come to that in a minute. And the final of the commodity currencies, the Aussie, continue to drift down, well, not drift down, but trend down quite significantly. We're now on 68, I think. Sorry, under 61. Yeah, 61 has been breached today. Key line, and then obviously, but that again, this is an end of day pair, and against another one that's been short from the beginning of June. Bit of a retrace mid-June, but it's just trending lower ever since. So shorts being added around about here at 62. That was breached here at 60.78 at the moment. 60.50 is the next key support. Momentum's rule. It's starting to pick up again on the map here. I don't even see that just up on my head here, but that's moving lower as well. Two key commodities, gold. We've looked at gold earlier, remains very much in a downtrend. Big kick out this week. We've got the daily time. Let's look at it. This massive candle here, 6 and a bit, 7% down on Tuesday, breaching the key. Well, the initial support was at 102. That didn't last too long. The $100 barrel last at all. It's psychological coming into play this week. Under 98, 97, 95, 94 area, and right down. If we just bring this up here, you can see it's the daily chart. Remember, for US. So there's the 200 EMA, which comes in here at $93. So $93 has been tested this week. So we're way under $100 a barrel. And our next to the upside was our support to the downside. So 95 and 97 are our resistance to the upside, and then obviously the big round $1 is resistance. But as you can see on the daily time frame, another one that is a key breach of its 20-day average back again. This time a bit later on, the middle of the key day was the first indication that we were rolling over a bit here on the 15th of June. It wasn't until 2 days later we had the big shakeout, but again, the 20-day moving average kept you the right side of that trade. So retrace, big move down, trace short, big move down here last week, another big move down here this week on Tuesday, under $100 barrel into 93, which is a key 200-day support level. That's the next big support. If that breaches, Let's go to our weekly chart. If this 93 area breaches, we're down to 90 very quickly. And this was a nice steady weekly rise here from this low at the end of December, in the spring of 2020. This is spring of this year. So again, we could unwind in the autumn to the downside similarly, but 93 and 90 the next big support lines for US oil. And gold we talked about earlier, and equity markets we talked about earlier also. So I'm not getting any new comments. I'm guessing we've got some sort of technical issues. Let me check our Facebook page. I'm not sure if I refresh this. I think I might lose it. Let me just try that and see what happens. So just bear with me. If I disappear, thanks for being here for the last half an hour or so. If I'm still back, we'll come back and see what your comments are. So let's just try and refresh this. Reload. And it looks like you've all disappeared. Right, I'm going to call it a day, guys. That's not reconnected. So all the very best. Have a great weekend. Trade safely. Not a great deal of data tomorrow, but finish the week safely, and we'll see you all again next week. All the best, everyone. Bye-bye.